Hey there, happy Monday. It's me, Victor here. Going to do one more recap to my future self and to y'all. Happy Martin Luther King Day out there. Again, all these are for financial advice only. Don't take it as. Did I say it backwards? That's funny. Point. This is not financial advice, okay? All this is for educational purposes only. That's funny. Okay, I'm not a guru. I'm not a master of the markets. For those who don't know who I am, I'm not going to go over the entire gist because it'll just waste time. Okay. Um, Point being, when you watch this, it's going to be likely 4 years from now. Okay, I'm 22 at the time of me filming this, and when I watch this, Victor, I'm not sure where you'll be, or what. I'm not sure where you'll be in your trading process, but always remember that if you're still in the game, you're winning. Okay, and I'll go over that in a minute. But this video lesson is going to be titled Three Pillars of Trading Success, okay? And what do I mean by that? Three pillars of trading success. Now, you out there, I'm not sure who you are, understand that the stock market trading will be one of the hardest things that you ever try to do. And I'm not a master, as I mentioned before. I'm not an expert at this, but just know that the odds are against you, okay? From the start, the odds are against you. And 95% of traders who try to become consistent don't make any money at all. And most importantly, after a year, they're not in the game anymore, okay? So the point of these is just to help you learn from my mistakes that I've made in the past in order to do better in your trading. Okay, I don't want you to take everything I say and apply it to your trading process because it doesn't work that way. All right, understand that this is not a this is not a one size fit all proportion. Okay, what works for me will not work for you, and I do believe that's one of the common traps out there that many. It's not the guru's fault because they're just trying to pass on the lessons that they learned, but it's really the new traders out there. They try to do too much, and I was there in the beginning. I was there, and I'm still there. I mean, I've kind of focused on a few setups now, but in the beginning when I first started trading, I was all over the place. I was trying to go long, trying to go short, and that just gives you a lot of headaches, in my opinion. Um, but you have to find your own trading system, and that's one of the pillars to trading success. Okay, but let me just go over one by one. Okay, the first one. Again, I don't have a freaking PowerPoint here or slide. I'm just laying this up top of my head. Okay, and again, these are my opinions. Okay, don't take it for what you will. I'm not an expert. Okay, don't judge me. I don't know. I like talking about the stock market. And again, as I am filming this, real quick, you always ask, how much money have you made? Here you go. I've not traded since last September, okay, of last year. Okay, put it that way. Last September of last year, I've not traded. Why? Quite frankly, I blew up my account, and I'll go over. Well, risk management. That's one of the pillars of trading success as well. Okay, and I didn't follow it. I simply blew up my account, and I blame no one but me. Because again, as I go over in the risk management portion, you must take responsibility of your actions. Okay, and it's no one's fault but my own. I understand it. I accept it. But third time's a try. Or third time's a charm, they say, right? And we'll see what happens. But I'm currently in the process of funding my account, and we'll go from there. All right. But number one, in order in order to really make consistent profits in this game, you have to know who the hell you are as a trader. And what do I mean by that? I mean by you have to know what fits. See, and again, I'm not an expert. I'm gonna keep saying that over and over again because I don't want you to think I mastered this game. No, I'm not. No, I always will be a student of the markets. I always tell myself that. I try to learn something every day and apply it. Okay, but I like watching videos of great traders because they say success leaves clues, and I do agree with that. Okay, um, Chat with Traders is one of the great podcasts I do love to watch and listen to. And I wouldn't say I watched all of them, but I watched a great number of them. And there's one common theme that each trader has, or there's one theme that really prevails itself in each episode. That is that each trader has their own unique personality. And what does that mean? That means that they focus, they stay in their lane. They focus on one or two setups that they are best at, that have the greatest edge in their favor. And one of them was Blair Hole. His episode with Chat with Traders really stood out with me. And he had a common saying that goes, if you don't have an edge, there's no reason to play. And an edge simply means, in the long run, let's say you take 20 trades. Out of those 20 trades, the edge shows that you'll come out net profit with a positive expectancy, out of those 20 trades. And there's tons of ways to do it, to find your edge. I mean, you could track. I know there's a lot of, you could do coding, for instance, like on Python, back testing. But I'm not that smart. I'm dumb, I do mine via spreadsheet, I just track certain patterns. Like this one right in front of you. This is a classic multi-day breakout on a NASDAQ chart. And I can talk over it now. This is the number one step in the 3 pillars of success. Number 1 is finding a trading system, finding your edge. And let me just go over this one point I saw on Twitter, right here, by Trading Composure. Great guy to follow on Twitter. Her, I'm not sure if it's a guy or girl, but human behavior changes over time, but not human nature. That is why you'll see and will continue to see the explodable patterns in the markets. That is 100% true, okay? The same patterns will always be here. That is why I always tell myself, and I want to tell you, okay? It doesn't matter how much money you make in the beginning or the end. All that matters is if you are in the game, okay? And I read it in a book once. I'm not sure who said it, but it goes something like this, okay? They always tell me, I'm paraphrasing here. I think it was in the Market Wizards. I'm not going to say it was Paul. It sounded like Paul. I'm not sure who it was. But basically they say, the way it went was that the markets are going to be there in 90 years or 100 years, whatever it may be, But are you going to be there, Are you going to be able to see the types of moves that happen in X amount of years? Because the market's going to be there no matter what, okay? The question is whether you will be, okay? And all these patterns, now what do I mean by patterns, okay? I mean by, it's really hard to put into words what I mean, but you just have to experience it. That's all it is. You can study it, but I'm not saying not to study, okay? But it all comes down to experience. And I've seen these plays firsthand for the past 3 years, and plays, I started tracking these in 2018, IGC, this was my first supernova run. This was my first supernova I ever witnessed, and this was, God forbid, one of the greatest pump and dumps I've ever seen. And the list goes on and on. I tracked a lot of patterns, okay? And one of them was the gap short. The gap short really doesn't exist anymore. It's kind of gone away. And that's the thing about an edge, okay? You have to find an edge that, because it's natural for edges to go away in the markets. It's a constant cycle, okay? But this is one of those patterns, a gap short. They all look the fucking same, okay? But they all look the same, okay? They all look the same, okay? But that's one of the patterns I kind of exploded back in the day. But there's tons of patterns. This is in 2018. This was in 2019. There's like tons. They all supernovas, And of course, last year was insane with the coronavirus sector stock, And this year, I kind of got my own one going. But point being, you have to find what you are best at as a trader, okay? And I hope I'm making sense to it. I hope you understand what I'm saying here. But you have to find a trading system, okay? I'm not saying in the beginning to not test the waters. No, because I did that, okay? I'll bring it back right here. When I first began trading, right in the beginning, right in this downtrend right here, I was trying to do everything, okay? And I'm not saying that it wasn't good, but I didn't know who I was as a trader. So in that time frame, I lost roughly 1,500 bucks of my own money. It could have been a lot worse, but I minimized my downside because I was just learning. I was testing the waters. And again, I'm not against paper trading, but I would much recommend you trading with real money because it changes the psychology of things, in my opinion. But if you do trade with real money, please do with your own money. Don't do with someone else's money, and trade with a small account. You know, when I was in this time frame right here, I was only risking 30 bucks per trade. Okay, and this was a 9-month span. This was 9 months right here of me going down, not profiting, nothing. But I didn't let that bother me because I knew it was a part of the process. Okay, in the beginning, you will lose, as I'll say over and over again, probably 1,000 times in this video lesson. But it's inevitable, you will lose. But it's about keeping your losses small, and that's what happened in this time frame here. I was risking 30 to 50 bucks per trade, and in that time frame, I found out that only one or two setups made sense to me, and that was going long over the counter stocks and buying multi-day breakouts unlisted, you know. But what led me going up right here was really going long over the counter stocks. That's really what it was right there. And of course, me blowing up was a lack of risk management, which I'll go over later on. But just focus on one or two things in the beginning, okay? I'm not saying that's the end all be all, you know. You always want to expand your playbook, to say, because as a trader, you always want to have a lot of setups in your arsenal, but have those one or two that you really exploit with edge and size, and make the most profits on those setups, in my opinion. But again, trading system, you know, I mean, this is a classic. Wherever you watch this in the future, just understand this pattern will still be there. This is a classic NASDAQ multi-day breakout, and it's a beauty. You know, you have the nice gap of news, consolidation, 1 day, 2 day, and it's not a coincidence, guys and gals. It's a Friday. You should know by now, Fridays are a very special day in the market. Okay, you have a lot of short sellers. Quite frankly, I'm not sure who would want to short this stock on a Friday whenever it breaks the key ranges, which it broke, because it was in a channel. All these days right here, it was in a nice channel, holding its ranges, and you have shorts. First off, I don't know why you want to short this stock. You have no range towards the downside. Think of this as a freaking risk-reward ratio. As a short, and God bless you shorts, okay? Again, shorts made this move. This didn't happen because of there was no news on this stock. The news was a short squeeze. That is what it was. Simple as that. But shorting wise, I don't know why they want to short this. There's no range towards the downside. There's no risk reward. What is your reward? Making what? Shorting it at what? I don't know, make 40 to 50 cents. There's no reward on the downside. For shorting, you want more meat on the bone, you know? You want it to go high as possible to have the most risk. Wait, backwards. The most reward compared to your risk. Because if you're shorting it in this range right here, you're asking for something to happen to you. And I watched it the entire week. I didn't know, but I knew the odds were in a favor of us having a nice breakout, because the fact that it based for not 1 day but 2 days was a great sign of strength. And Friday, all it took was a nice spike. It was a nice Friday morning spiker, as my guru Tim Sykes always says. And congrats to those who banked. And not only that, but the fact that it managed to do the exact same thing. Do you see any correlation? Do you see any correlation from this move right here? Consolidation, ramp, consolidation, ramp. You see any? You know what I mean? Of course, hindsight's always 20/20. Okay, hindsight will always make things look easier, but in reality, it's not. But again, This is pretty much a short squeeze, and God bless anyone who was long, and God bless those shorts. Okay, but you'll see this pattern over and over again. This is just one of them. Okay, and whenever you watch this, there's gonna be always another breakout on deck. You know, God bless you. And this is just one setup of my edge. Know who you are. This is a classic multi-day breakout. I've tracked this pattern. I know the odds of the pattern. And currently, I guess I'll show you. I guess I don't really like showing people. But I'm currently trying to track with the MACD. The MACD signals. I'm currently trying to track how that correlates with price action. So that's pretty cool. We'll see how this goes. Again, think of yourself as a scientist. You know, we'll see how that goes. Okay, but point being, that's one pattern. What is another pattern you want to see? Another. This is the same type of scenario. SBEV with OPTI. Same type of scenario. You see the same correlation here with SBEV channel right here, right? It's in a channel with OPTI. It's in the same type of channel. Now I'm not sure what's gonna happen. You know, I'm not trying to predict stuff. I'm just playing by the odds. Of course, the stock has gone beaten down, but it is January, so it's the January effect. All of these beaten down companies start running again. You know, we'll see what happens. I'm not saying this is gonna have a monster run. I'm just looking for the nice high day break. You know, that's one pattern on an over-the-counter stock. Another one, which I love, is these overextension stocks like GMVD. You know, this has no reason of being up, but it is for some, who knows what. There's no news on it, but God bless whoever's behind this. This is just one of the patterns. I guarantee you, this will collapse just like the other one. The other one I'm about to show you right now, which is the other one, IMTE. You know, GMVD, IMTE, the exact same. Do you see what I'm telling you here? It's like I'm taking crazy pills, you know. GMVD, IMTE. Oh, so on. IMTE. It's embarrassing. IMTE, GMVD. The exact same pattern. Okay, it's an overextension. Okay, I understand these are not lasting. Okay, these will collapse. It is inevitable. Whenever you watch this, look this company up, and I say company in quotation marks because most of these companies are complete junk. This is gonna have a monster crash. Ideally, it's gonna squeeze more. That's what I'm thinking. It's gonna have a nice short trap. But we'll see what happens. The higher the better. Crack of 840. It's a goner. All right. But again, I know I'm going kind of fast here. Okay, I know I just really get riled up talking about all these patterns. It's just how it works. But know who you are as a trader. Okay, if you don't know who you are, track your trades. Use TraderView. You know, I use TraderView, and I learned a lot about myself. But that's really number one. Okay, you find a trading system that works for you. Test the waters. You know, when you start trading, again, with small money, do with money you're fine with losing with. Okay, because I lost. I was down roughly $1,500 in my account. 1,500. I was down, and that didn't bother me because I made roughly. I had a good job. You know, I was testing the waters, and believe me, after a while of tracking and reflecting on your trades, you'll know what you're best at. Okay, you will. And whenever you do, just focus on those. You know, if you don't see the setup, you don't have to trade every day. You know, you don't have to trade every day. The market's there. Yes, the market will be there, but just because the market is there doesn't give you the right to trade. You know, hell, look at me. I've not traded since fucking September. Okay. There's nothing stopping me from doing it. I can easily do it. I'm just taking a step back because of life, you know. I'm going through things right now, but as I mentioned, everything's temporary. I'm not going to get into details with that. But you will know who you are as a trader once you test the waters. And experience does pay, okay? And if you lose money, don't worry, it's a part of the process, okay? I do believe that every trader has to blow up once, in my opinion, okay? And I know there's many out there who have not, like Jack Kellogg, God bless him. He's a millionaire trader, you know. I'm not saying you don't. I'm not saying that in order to become a successful day trader, you have to blow up your account. No, but I think of it this way: think of your losses as market tuition on Wall Street. That is what they are. It's market tuition. You know, me losing $1,500 means nothing in the end. You know, in 20 years, it's not going to matter. Okay, and and again, don't take me for don't take it as me saying to ignore your losses. No, study them. Okay, study them. So again, number one, trading system. If you have any comments on that, please leave a comment below. I hope I kind of explained it well. Okay. Number two, risk management. Now this is really, I would say, the holy grail of everything, because in order to really get to the point where you find a trading system, you have to stay in the game. Now, what do I mean by staying in the game? It's simple. Being able to come to the market daily and betting on your odds of success. And that's really the reason why I blew up my second account. Well, twice I blew up my 2 times I blew up my account was as a result of lack of risk management, you know. And I do believe many traders out there, like myself, you know, well, they give up too soon, you know. They lose all their money and they say, "Oh, this ain't for me. I'm gonna go do something else." No, you know, a lot of traders are out there. That is the common case for them. You know, they blow up their account once. They say, "This is not for me. I want to throw in the towel." And I urge you, don't think that way. You know, if you really do want this, you have to keep going. You know, if you really do want to become a consistent trader, you have to ask why those things happen. And risk management is very important because you have to stay in the game. I already said that, but it's very important. Okay, I always see things on Twitter like, how much money do I have to make a day to become a millionaire? Or I always see Twitter. I try to stay off Twitter as much as possible, but I'm kind of not doing well on that, to say. But understand that any money you make in the beginning means nothing in the long run. You know, all the money you make, it doesn't really mean nothing, because if you really throw out the book of real risk management, you can lose it all. You know, all it takes is one trade really to wipe you out. You know, that's all it really takes. And that was a case whenever I was trading last year, because I was on a monster run I was on a nice run all this way right here. You know, this was, what was that, a span of one? This was 2 months, I think. Yeah. This was 1 month of trading. It doesn't look like it here because it doesn't show, but this was 1 month of trading, you know. I was downhill for 9 months right here. Then 9 months I was going back up. And the reason why I blew up is simply because I threw out all the rolls of my risk management threshold. I said, screw it. I know best. That's what I said. And of course the market humbled me, and I blew up my account right here. Simply by oversizing, you know. I took too large of a size in comparison to my trading account, and I didn't want to cut my losses quickly, as my guru Tim Sykes always tells his students, and I simply ignored that rule. And doing it once costed me, okay? And I'm here to tell you, okay? Keep your losses small, okay? Whatever you're doing in trading, don't worry about the money. You know, surrender to the outcome, because your trading process will take care of it, okay? If you have edge, there's no worry about the money. It'll come like an afterthought. But risk management is important, okay? Now, I know I keep saying it, it's important. You probably want to know what the fuck do you mean. Let me tell you. Number one, okay? There's 3 key points in whenever you go into a trade. You always want to know your entry point, always want to know your exit point, and always want to know your target point, okay? What's the first one you should know before entering the stock? The first one you should know before entering a stock is your exit point. That is the most important, okay? I always go into every trade thinking risk adverse. I always ask myself, what is the worst possible scenario in this outcome? That is what I ask myself. When I go into a stock, I ask myself, what is the worst possible outcome? At what point am I going to get out of this stock? You know, I don't say at what point am I going to add to a loser. You never add to a loser. You never. Okay, I want to say this one more time. You never average down. You never do it, okay? I don't give a shit if it helps you one time. I don't give a shit if it helps you twice or three or whatever it may be, okay? Now, again, if you have a larger account, yes. Most of the stuff I'm saying here applies to those who have a small account, okay? I'm not saying you can average down. Maybe you can if you have a large account, but most of you watching this has a small account like I do. And when you average down, it may work out in the beginning, but I assure you, in the end, it's not going to work out well. Okay, you never add to a losing position. You never add to a losing position. You never do. Okay, most of the time, you should know when you're on the right track and trade. Because most of my profitable trades, I make money. Like for most of the trades that I know I'm going to win, or not win, but have good odds on, I'm profitable from the start, you know, to say. I mean, and it's kind of ironic because my largest losses are the exact opposite, and sometimes they come back, you know, but those are outliers, you know. And again, this game's all about odds. It's all about having odds on your side, and I forgot what I was gonna say. But having a brain fart here. What was I gonna say? I just totally blanked out. That's hilarious. But never had to a losing position, you know. But I'm sorry, I'm getting off top. I just completely zoned out. But target price, entry point, and risk point. Okay, and a number one key thing as well in risk management, which I don't hear nearly no one talking about, which kind of is weird, is proper position sizing. That is what I mean. Proper position sizing. I don't hear really no one talking about that. Now, what do I mean by that? I guess I'll show you an example. Okay. Of course, all this is hindsight. Okay, hindsight 2020. All right, but proper position sizing really does mean a lot, because if you just buy this breakout, let's say you buy the breakout at, let's just, for lack of better terms, let's say 320. You buy it, okay, you buy, who knows, you know, I mean, it's pretty simple. Nothing's ever pretty simple. But, like, for instance, this is how I would do it, okay? Of course, the market moves fast in real time. You don't have time to do this one, but I'll show you, unless you're really good at math. Of course, you can see it coming a mile away. Okay? But 320 you buy. Let's say you're only willing to lose $30. And first off, as I mentioned, entry point will be 320. What is your risk point? Let's say you risk $3. Okay, and of course, the wider the stop will be, the less shares you will have. That's one of the common themes out there that I always see. Give yourself the wider stop. If you ever do feel like you're uncomfortable in the position, take the wider stop. Yes, it'll give you fewer shares, but again, it's a process. You know, as you grow as a trader, you learn what proper size works for you. But always take the wider stop, in my opinion. That's what I would do. But let's say 320, you go long, you're risking $3. Okay, that's 20 cents a gap. Let's say you're willing to lose $30 divided by 20 cents. That'll give you roughly 150 shares worth at 320. 150 shares worth at 320. That's roughly a $480 position. That's a nice for a small account, you know. Target point, you sell for 3-to-1 ratio. Always go for 3-to-1. I try to go for 2-to-1. All right, that's really the goal. I don't never really go for 1-to-1 on risk reward ratio. I just never really do. But let's say you go for the 2-to-1 ratio, which at 320 that should be 330, I think. I'm not sure. No, I have this spreadsheet here. Let me show you. I do this with every trade I go into. Every trade I do this. Every trade. 150, 3-to-1 ratio is at 380. You would sell 380, you would sell for a nice profit of 90 bucks. 90 bucks, risking 30. Entry point 320, risk level $3, max dollar loss 3, target price 380. And of course, you could always, if you want this spreadsheet, just let me know. I didn't make this. A friend gave it to me. But you need to change the things. I'm not saying I would have held the entire way. I always like to take profits. You know, I mean, you never go broke selling profits too soon, as I always say. But I guess you never go rich as well. But there's a lot of ways to do that. But that's really what I mean. Risk management, you know, and having proper size in your trades does mean a lot to me. Okay, I know that. Like for me, when I started out trading on that nice run you saw earlier, I do my trades in sample sizes. Now, what do I mean by that? I like trading, like for instance, I placed 21 trades using the same dollar risk. Let's say I did this example right here, 30 bucks. For the next 21 trades, I'm going to risk only $30. That is it. I cannot increase my risk until that sample size is complete. Then after that sample size is complete, I reevaluate what I'm doing wrong, what I'm doing well. Then I have to earn the right to size up, if that makes any sense. Okay, I have to earn the right to size up. And when I blew up my account, which I showed you earlier, I completely ignored that. I was taking size too large, and I've never taken that big before. And yes, I got lucky on 1 or 2 of those plays, but that is the worst thing that can happen to you. Okay, that is the worst thing that can happen to you. The worst thing that can happen to you is that you break your rules and it works out for you, because it'll feed your ego. It would say, "Oh, I know what I'm doing. The market doesn't know shit." Then all it takes is that one trade to blow you out, and that is what happened to me. Okay, so again, risk management, trading system. In order to reach your trading system, you must have proper risk management. And I don't care how well your trading system is, if it doesn't have proper risk management, you will not be in the game, okay? Because this is just like poker, you know? Once you lose all your chips, go home. The casino doesn't want you there. They only want you there when you're betting on the table. And when trading, when you're out of your money, when you're out of your chips, go home. Come back when you have more money. The only way you have a shot of doing this is if you're in the game, okay? So in order to stay in the game, have a proper risk management system. And if you are on a down streak, downsize. If you're losing constantly, downsize. Don't let people judge you. Again, ignore all those people on Twitter posting their P&L. Who gives a shit? That's dumb, you know? Focus on you. But trading system, risk management. The last one is sound psychology. Now, this one really does tie into everything here. Again, I'm not a psychologist. I don't pretend to be. I'm just a 22-year-old who loves this shit. Well, not loves. I'm obsessed with it. That's a different thing. Okay. But sound psychology. Now, what do I mean by that? Where do I begin? Again, most of us out there, we're not good at math or the best at what we do, or, you know, I'm a college dropout, but I don't let that affect me at all, you know. Sound psychology, this, I could talk about this for, I guess, I'll leave this up here for you to read. Sound psychology, it's a hard one to talk about, sound psychology, because I mean, you can go many angles, but understand, I guess I'll go over it in a quick point here. Just know that it is really a battle within yourself. You know, you're not competing against the market, you're competing against yourself. You know, your greatest enemy is the one in the mirror. It's you. And you have to understand that you will lose, as I mentioned before, in this game. It is inevitable. You will lose money. Okay, accept it. And I'm not sure if that it may hurt your psychology level, but it didn't hurt me because I knew that it was part of the process. Um, but when you lose money, just accept it. Learn from it and move on. And it all has to tie with trading. How you sleep, what you eat, everything in life has it affects your trading. Like whenever I have a bad day, I don't trade. I just don't because it will affect my trading. And here's another quick point. My stats show that I'm not profitable in the morning, and there's a reason for that. I'm not a good morning person. I love to sleep in, and they always make fun. I mean, sleep in like 10 o'clock. I'm not saying sleep until 1. No, but I like trading in the afternoon. That's where my edge shows that I'm most profitable. Yes, I miss some plays in the morning, but my edge shows me that I'm more profitable in the afternoon, so I listen to my edge. I know myself. Know yourself as a trader. Okay, know what makes you mad, know what excites you, and understand most importantly, we're all human. As traders, you're gonna make mistakes. Okay, it is inevitable, but don't blame no one else. It's one of the key aspects of really becoming a consistent trader and a great trader is taking responsibility. You know, um, take responsibility of your actions. I think I have it here. Do I have it here? I don't think. Well, I already gone over this in the last video, but maybe you haven't seen it. But take responsibility of your actions. Whenever I blew up my account, I didn't blame no one else. I didn't blame, Tim Sykes, all you bastard, let me lose money. No, I blamed myself. Why? Because it was my fault that led me to blow up my account. And this doesn't only apply to trading, it applies in life. Whatever you do, take ownership of that. And it's okay to fail because, again, failure is temporary. If you quit right then and there, then you're done. It lasts forever. But as long as as long as you're breathing, as long as your heart beating, you have a shot at this. Okay. But I know I'm not really going over this aspect well, trading psychology, because it really is a tough one to dissect. Okay, it really is. You'll never master this game. You never will. As I mentioned in the beginning of this, I'm always a student of the game. I'll never consider myself a master. Um, 'Cause I see stuff every day, that I've never seen before. Yeah, the patterns are the same, but they're not exact. But you'll see over time that this game it takes a toll on you for the better, I would say. But there are times whenever you may be going on tilt and you need to take a step back. And I've done that numerous times. I've not. It happened really on my second year of being in the markets. I was getting burnt out from really just watching, and I had to take a step back for about a month and a half of no charts, nothing. Month and a half off, just going golfing, going outside, and sometimes you need a break from this because it does take a toll on you, and come back rejuvenated. But you have to know who you are. You have to know who you are. Your inner self, to say. It's all mental. It's all mental. Again, the losses, the losing streaks, um, they're not lasting. It's only temporary, okay? But whatever you're going through right now, if you're going through hell, put it this way: if you're going through hell, why would you stop through hell? After everything you're going through, why would you stop in hell? You know, get out of there, make it to paradise. But this has gone longer than I anticipated. I hope many of you watched this so far. Um, but again, 3 pillars: you have trading system, risk management, and sound psychology. I hope this makes sense. I don't know. Me saying this is 40 minutes now. I know the longer these are, the less people that will watch it. And I understand that because I'm no one right now. But again, the point of these is just to do the before the scenes, and we'll see what happens. But other than that, I hope you'll have a great rest of the week. And whenever you see this, I'm not sure where you be. But again, remember, the patterns will always be the fucking same. Okay? They always will be. Alright? Other than that, I'll see you soon. And happy MLK.